What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And before starting out the video, I do want to apologize because it was absolutely impossible, guys, for me to record any videos in Spanish or English because of the insanity that we saw yesterday in the market. So I had to go live on my Patreon, and it was impossible, guys, to record any videos. So I do apologize about that. And today I am back. So without further ado, let's get right into the video. And the markets did pretty well today, guys. We had a decent relief rally. Now the question is, was today a bull trap? Let's discuss about that. So the Russell 2000 was the best performing index today, going up 2.63%. Nasdaq went up 0.83%. Dow Jones went up 1.82%. We saw a very interesting rotation into the inflation trade today, and the S&P 500 went up 1.42%. I do want to show you guys a heat map of the S&P 500. So take a look at the laggards today, the stocks that went down: Microsoft, Apple, Amazon, Tesla. So the handful of stocks that have been doing the heavy lifting recently today took a rest, and we saw a very healthy rotation into the inflation trade. And why do I say the inflation trade? Well, because financials was the best performing sector today, going up 2.96%. Industrials went up 2.93%, and the energy sector went up 2.87%. So the fact, guys, that the 11 sectors that trade inside the S&P 500 went up today is very positive. And on top of that, sectors that were very oversold, mostly the financial and the industrial sector, led the way today. So we had a very positive day, no doubt about it. Keep in mind that this morning we had jobless claims coming out, 222,000 new claims relative to what the analysts were expecting at 240,000 new claims. So it looks like the employment situation is getting better in the US. And keep in mind that tomorrow at 8:30 a.m. Eastern Standard Time, we are going to have the jobs report of November. So the ADP report already came out better than expected. That was on last Wednesday. And today we had a very positive jobless claims report coming out. What the markets are expecting tomorrow would be 550,000 new jobs created in the month of November. And what could happen, guys, if we happen to have a way better than expected jobs report tomorrow? Then the, let's say, most natural reaction of the markets would be going after the inflation trade, the sectors that precisely led the way today: financials, industrials, and energy. Myself, in this moment, I actually have positions in both the financial sector and the industrial sector as well, because I think that between the inflation fears out there and the jobs report that should come out tomorrow way better than expected, I think that these two sectors, or let's say these three sectors I am going to include in the inflation trade materials. So I think that financials, industrials, and materials are going to do pretty well from now and on. And keep in mind, guys, I have been, I have been being asked a lot of questions about December. You guys know that from a seasonality standpoint, December is, for the most part, the best month of the year. So can we have a Santa Claus rally this year? That might be the case, but I think that this month is going to be a tough one, guys. First of all, tomorrow we have the jobs report. This is going to definitely move the markets. If that report happens to come out way better than expected, then that is going to be assumed as a sign that the economy is getting overheated. And obviously that is going to, let's say, I got a call here. Sorry about that. So that is going to increase the inflation fears. And that's why I am telling you guys that the inflation trade might do well from tomorrow and on. And keep in mind, guys, that on December 10th, we are going to have the CPI data report of November. That is going to be absolutely critical. And on top of that, on December 15 and December 16, we are going to have the Federal Open Market Committee, in which committee or in that meeting, Jerome Powell already said this week that they might consider speeding up the tapering process. And don't be surprised, guys, if the Fed actually starts to hike interest rates ahead of time, guys. And when I say ahead of time, I am talking about March, guys, because the markets are assuming, as of now, that the very first interest rate hike is going to be carried out in June. So what happens if on December 10th, we have a way worse than expected CPI data report, and then on December 15 or 16, the Federal Reserve let us know that maybe the very first interest rate hike is going to be carried out in March and not in June, as most markets participants are expecting as of now. That would create a lot of volatility, guys. So this month of December is going to be a very tough one. And the $1 million question is, are we actually going to have a Santa Claus rally? I don't know, guys. At this point, that's anyone's guess. And now I want to show you two trades before going over the S&P and the Nasdaq 100 and 5 stocks that I am going to go over in this video. I want to show you one trade that I closed in a successful way today, and another trade with which I had to assume a loss trying to short the S&P 500. So you guys know that I am a Tesla long-term investor, and I have been selling covered calls left and right, guys. Selling covered calls of Tesla for me has turned into some sort of part-time job. Let's just put it that way. So on November 19, I sold the $1,345 call that expires on December 10, and I was paid $1,020 way back then, guys. And today, I bought back the call option that I sold on November 19, and I paid $155, guys. And obviously, immediately after that, I sold another covered call that expires on December 17. But long story short, I was paid $1,020 on November 19, and today I paid, in order to buy back the call that I sold, $155. So I ended up making over here $860. And take a look at SPXS. So yes, I tried to short sell the S&P 500. It didn't work out well, guys. I was expecting the bulls to be rejected at 4,570 points, and they ended up breaking out, and this trade didn't work out at all. So I purchased 400 shares this morning at $19.42, paying $7,767, and I ended up cutting my loss at $19.14, and I was paid rather $7,656. So I ended up assuming a loss over here of $111, but including the covered call of Tesla that I bought back today, and subtracting out this loss, I ended up making today $749. Long story short, so I have absolutely nothing to complain about today's trading session. And now let's go ahead and take a look at the S&P 500. And no, guys, this is not the S&P 500. This is Roku. And I am not going to talk about Roku in this video, which chart, by the way, looks horrible. So the S&P went up today, as I said in the introduction of this video, 1.42%, and it closed today's trading session at 4,577 points. I am going to zoom in here on the 4-hour chart. And guys, the fact that yesterday, and despite the horrible sell-off that we saw, the horrible panic sell-off that we saw yesterday, something that is worth pointing out is the fact that the bulls managed to hold this 180 SMA on the 4-hour chart at 4,519 points, 45.19. So today we went up 1.42%. And in terms of overhead resistance, the most important task that the bulls need to carry out tomorrow is going to be bursting above 4,600. 4,600 is a previous area of support back from November 1st, and also it is also an area of resistance back from October 26th. So that is going to be the most important task, guys. There is a second gap that the bulls need to fill up to 4622, which happens to be a former area of support back from November 3rd. And guys, the relative strength index of the S&P is at 43 points, very healthy from a technical standpoint. We held this 180 SMA on the 4-hour chart. We are still on a clear uptrend. So can we see more downside activity? Yeah, that could happen, obviously. But today we saw a very healthy rotation back into the inflation trade, back into financials, which, as I have always told you guys here on the channel, is a very important sector inside the S&P 500. And we didn't have, once again, only a handful of stocks doing the heavy lifting. The 11 sectors that trade inside the S&P, inside the S&P 500, if I happen to be able to talk today. So the 11 sectors closed in positive territory. So can we go lower? Yes, we can. In that case, the bears need to take on this 180 SMA and break 45.18 to the downside. But as of now, guys, we are on a clear uptrend. We are trading between the moving averages. And today we saw a very healthy rotation in the case of the S&P. And I'm thinking, guys, that if tomorrow we happen to have a way better than expected jobs report, then the inflation trade and mostly the financial sector, which is a very important sector inside the S&P 500, because we can make the case that maybe big tech might be affected in a negative way if we happen to have a way better than expected jobs report, because that is going to increase inflation fears, and inflation is obviously a very negative for higher multiple stocks. But if maybe the tech sector, takes a rest tomorrow, then the financial sector and the industrial sector might be able to do the heavy lifting, and maybe the bulls can take on 4,600. So from a technical standpoint, I have nothing to complain about the S&P 500. Was today a bull trap? We will see what happens tomorrow. Okay, in the case of the Nasdaq 100, it went up today 0.71%, and it closed today's trading session at 50,990 points. I am going to zoom in here on the 4-hour chart. And guys, the next important task for the bulls of the Nasdaq 100 is going to be taking on 16,000 points. Keep in mind that today we closed slightly below 16,000 points. We closed at 15,990 points. Keep in mind that 16,000 points happens to be a former area of support back from November 26th, and we are also talking about a former area of support back from mid-November. So the task that the bulls need to carry out tomorrow is an easy one, guys. They just need to close above 16,000 points, and then they have to fill the next gap up to 16,300 points, which is a previous area of support back from mid-November, and also an area of support back from early November. So this is the most important gap that the bulls need to take on. And mind you, guys, if the bulls can fill this gap up to 16,300 points, at the same time they are going to be taking on this 50 SMA on the 4-hour chart, and by doing so, they are going to be once again in full control of the Nasdaq 100, because as of now they are trading between the moving averages. But we are still on a clear uptrend, and the relative strength index is at 41 points, very healthy from a technical standpoint. So guys, if tomorrow we happen to have a way better than expected jobs report, maybe the Nasdaq 100 can have a humble performance. And if they close above, if the bulls can close above 16,000 points, they are going to be, for the most part, doing their homework. And now let's go ahead and take a look at the first stock of this video, Docusign, which I think that should have already reported earnings. And yeah, they reported earnings. Take a look at this, guys. Oh my God. What the fuck, guys? What happened here? Hold on for a second. Take a look at this trap, guys. So Docu went up today 1.31%. Oh, I mean, guys, and this is another of the favorite stocks of Cathy Wood. So poor Cathy, guys. So Docu went up today 1.31% and it closed today's trading session at $233. So after hours, guys, we are seeing a drop of 24% in the case of Docusign. So we can make the case that these people dropped the ball. So let's see what happened over here. So Docusign reports EPS at 58 cents, beating the estimate of 46 cents. And sales came in at $545.46 million, beating the estimate of $530.63 million. So they beat on both, guys, EPS and sales. So I think that this drop must be something guidance related. So let's see. Okay, Docusign sees Q4 2021 revenue between $557 million up to $563 million versus, so they are down guiding here, guys, versus $573.79 million. So clearly, when it comes to revenue, guidance is way weaker than expected. And let's see, full year 2022 revenue, somewhere between $2.08 billion up to $2.089 billion versus $2.09 billion. So the guidance for revenue for full year 2022 is a bit below estimates. And when it comes to guidance for Q4, it is also weaker than expected on revenue. So that's a reason why it was not guys, this was a decent year earnings report, obviously. But take a look at the overreaction of the markets, a 25% drop. I'm thinking, guys, that since Cathy Wood is such a Docusign bull, she might buy this falling knife tomorrow. I obviously not going to touch Docu looking like this, but maybe she might buy the dip. So as of now, after hours, Docu is trading at $176. So this is an easy one, guys. I'm thinking that the stock of this company cannot be touched until it bursts above $182. $182 happens to be a former area of support back from May. So if Docu happens to burst above $182, that might be a sign that the dip got bought. That the dip got bought up, and that might be a sign that we can start a trade on Docusign. But take a look at this drop, guys. As of now, obviously, Docu is a no touch, guys. 100 foot pole for Docusign. What a nightmare, guys. This this last 2 months of the year for good old Cathy Wood. Now let's go ahead and take a look at Snowflake, which is a company that reported earnings yesterday, and they killed it, guys. However, this is a stock of a company that we need to be very careful with because, guys, this is a very expensive stock. Remember that as of now, we have inflation fears out there. And this is a stock that trades at very, very high multiples. So we have to be careful because as of now, the markets are loving Snowflake. But remember, we have inflation fears. We might have the Federal Reserve announcing that the first interest rate hike might be in March and not in June, as most market participants are expecting. So we have to be very careful with Snowflake, and keep in mind as well that this is not a profitable company yet. So as of now, markets are loving it, but we have to be careful. So let me take a look quickly over here at the earnings report. And what I mean by being careful, guys, is if we want to take a short-term trade, obviously, then we need to place a stop loss, guys, because the stock of this company went up today 15.85% and it closed today's trading session at $360. But if inflation fears happen to get out of control, or if the Fed happens to announce that the first interest rate hike is going to be sooner than expected, this stock can easily go down to $200, but no problem. So be careful when it comes to Snowflake. Okay, so the stock of this company not only reported a very, let's say, solid earnings report yesterday, but Snowflake also got upgraded by a lot of banks today, guys. So let me see. Oppenheimer adjusted Snowflake price target to $400 from $360, and I saw others. Let me see price targets over here. Let's see. So we have Oppenheimer and JMP Securities adjust price target on Snowflake to $385 from $350. So the markets are loving Snowflake as of now, guys. This is a stock that is definitely trending as of now. So let me see if I have the earnings report over here. So Q3, negative EPS. Obviously, guys, this is a company that doesn't make any money. Came in at 51 cents, may not compare to 6 cents estimate. And sales came in at $334 million, beating the estimate of $305 million. So hold on for a second, guys. This is a stock that doesn't make any money now. And the markets were expecting a negative EPS of 6 cents. And Snow reported a negative EPS of 51 cents. So this was a huge miss, guys, when it comes to EPS. Very weird. And this is not a profitable company yet. So whatever. I don't know, guys. And sales, I mean, sales beat the estimate by a long shot. They came in at $334 million, beating the estimate of $305 million. So this is, for the most part, a growth story, guys. And that's why the markets are loving Snow, even though the miss on EPS was a big miss. Let's just put it that way. So, guys, since there is such a good momentum towards Snowflake, I am really excited about taking a trade on Snow. So I am actually thinking about two different trades, guys. One would be a retracement of Snowflake down to this 180 SMA on the 4-hour chart at $350, which happens to be a former area of support back from early November. So I'm thinking that if Snowflake retraces down to $350 and if it finds a good support over there, it can bounce back up and fill the next gap up to $377, which happens to be a former area of resistance back from late November and also back from early November. So if I were able to take this trade from, let's say, $351 or $352 up to $377, we're looking, guys, at a 7% profit. Another possible scenario would be the bulls of Snowflake bursting above this 50 SMA on the 4-hour chart at $366 and filling the gap that I just told you guys about up to $377, in which we are looking at a 3% profit trade. So watch out for Snow and watch out as well for this 50 SMA, guys. If Snow happens to break this previous area of support right at this 180 SMA on the 4-hour chart at $350, we could see Snow pulling back down to $320. So this is critical, guys. Anyone that wants to start a trade on Snow has to keep a close watch on $350 because we could see a flush down if this area of support happens to be broken to the downside. And remember that this is a stock of a company that is very, but very expensive as of now. And now let's go ahead and take a look at NEO, guys. And the China FUD is back once again. So NEO went down today 5.51% and it closed today's trading session at $36.20. And guys, I think that 3 or 4 days ago, something like that, NEO, here I have the news. So NEO shares are trading higher after the company announced it delivered 10,878 vehicles in November 2021, increasing by 105.6% year over year. This was an increase of 105% year over year. Unbelievable. This is the perfect definition of a growth stock. and this was on December 1st. So yesterday actually was the day in which this news came out. And guess what, guys? NIO went down today in a day in which the markets, in general terms, went up. NIO went down 5.51%. So what happened in the case of NIO? Once again, the China FUD. So let me read here for you guys. So shares of NIO fell Thursday after a CNBC article noted foreign public companies that are listed in the United States may be delisted if their auditors do not comply with requests for information from U.S. regulators. This is old news. Definitely, guys. I already knew this. So, for the most part, the Securities and Exchange Commission already told most of the Chinese companies that trade publicly here in the US that they need to comply with the very same auditing rules that apply for the other companies that trade publicly here in the US. American companies, companies from South Africa, from South America, from Europe, whatever. And if the Chinese companies fail on complying with the same auditing rules that apply for everyone else, then they are going to be delisted in 3 years. They have a 3-year frame in order to comply with the same auditing rules and regulations that apply for the other companies, the other foreign companies, and even American companies that trade publicly here in the US. This is old news, and this is pure fear, uncertainty, and doubt. Period, full stop. So some people bought the dip on NIO. And keep in mind, guys, that $34.60 is a very important area of lower support. I think that any drop of NIO down to $34.60 is going to be bought up. We are talking about a former area of support back from mid-November, and we are also talking about a former area of support back from March and April. So watch out for another visit of NIO down to $34.60, because if NIO happens to find a good support over there, there are two potential price targets ahead of ourselves, guys. The first one up to $37, which happens to be a former area of support back from September, and it is also a previous area of support back from late April. And the other gap that the bulls of NIO have to fill eventually is up to $39, guys. $39 happens to be a former area of resistance back from late August, and also an area of support back from late July. So get this, guys, from $34.60 up to the first gap at $37-ish, we are looking at a 5% profit, and up to the second gap that I just told you about, we are looking at an 11% profit. So watch out for NIO. In any visit, I think, guys, that any visit of NIO down to $34.60 is going to be bought up, because as I just told you guys, this company yesterday posted a very solid number of deliveries for the month of November. And in my opinion, and I have already told you guys this on several occasions, NIO is going to be the second player in China after Tesla in the electric vehicle market. So anything below $40, in my opinion, is a buy in the case of NIO. And now let's go ahead and take a look at Uber, guys. And in the case of Uber, we have a very ugly looking chart. Uber is going to be the second to last stock of this video. But take a look at this, guys. A very, very nasty chart, clear downtrend, and Uber is trading below the moving averages. However, Uber went up today 5.83%, and it closed today's trading session at $38.12. And why did Uber went up today 5.83%? I'm glad you asked. So UBS set a price target for Uber of $80, guys. We are looking at, this is a 2x price target relative to the current price of the stock of this company. So I'm thinking, guys, that in the case of Uber, and despite the the horrible looking, the very ugly looking chart that we have over here, Uber is slightly below a very important area of lower support at $38.60. $38.60 happens to be a former area of support back from September and also back from early August. So I'm thinking, guys, that, and since we might be seeing a shift in momentum in regard to the stock of this company, if Uber tomorrow can take on $38.60 on good volume and momentum, maybe the stock of this company can fill the next gap up to $41.80. $41.80 happens to be a former area of resistance back from August and September that coincides on the 4-hour chart with this 50 SMA. So if we were able to take a momentum trade on Uber from $38.70-ish up to $41 or $41.80, we are looking at a 7% profit. So don't sleep on Uber, guys, because I think that if maybe the bulls can take on this former area of support that now is going to act as a new resistance, they might be able to fill this next gap up to almost $42 per share. And the last stock of this video is going to be good old AMC Entertainment that has gotten absolutely decimated, guys. But mind you, hope isn't lost. And why? Well, because the apes or the bulls of AMC have been fighting tooth and nail for $28, guys. So this is a very positive sign. $28 is a critical pivot, lower pivot for AMC, because we are talking about a former area of support back from early August. If this lower pivot of $28 were broken to the downside, guys, then what's the next foreseeable support for AMC, guys? $15, a previous area of resistance back from late May. So this would be very, but very negative for AMC. But as of now, the apes are still holding this support. So AMC went up today 6% and it closed today's trading session at I wish it had been $38, guys. $30.28. So the relative strength index of AMC is at 27 points. So the stock of this company is still in oversold territory. So I'm thinking, guys, that if AMC happens to drop once again down to $28, I think that the apes might still find support at that spot. And if so, guys, there are two gaps that they have to fill eventually, that I hope they are going to be filling eventually. The first one up to $34, which happens to be a former area of support back from late October and also back from late September. And a second gap, let's just put it that way, up to $38, which is another very critical spot for AMC Entertainment, because when we are talking about $38, we are talking about a former area of resistance back from August and also about a former area of support back from early June. So if we were able to take a trade purchasing shares of AMC at $28.30 or $28 or maybe $29, why not? So up to the first gap that I just told you guys about at $34, we are looking at a 12% profit. And up to the second gap that I just told you guys about at $38, we are looking at a 21% profit. So watch out for AMC, guys. And as I just told you, in the case of Snowflake, these two stocks have a very critical area of lower support. In the case of AMC at $28, and in the case of Snowflake, I think that I told you guys $350. But I do believe that if these two areas of support happen to be visited, and if they happen to provide a good support, then we have a very acceptable technical setup in order to take a trade on both AMC Entertainment and Snowflake as well. And with AMC Entertainment, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the bilingual stock market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel. But most importantly, you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys on Monday once again, 3 or 4 hours after the market closes. Peace out.